Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's July the 2nd. This will be our chart lesson for today. And just a reminder before I forget, tomorrow's a holiday, so no trading tomorrow for me. I'm taking the day off, and no chart lesson for tomorrow either. So this will be it for this week. We'll be back again Monday to start anew. And another another similar day where we traded up into to the open, and then we traded down, and we took about half of it back before the close. So we changed very little from yesterday. I guess we closed yesterday at 2071.50 or so, and today we closed at 2069 or so, right in there. So maybe a 2 point down, 2 points by the time the day was over. Um, but anyway, it was very similar to yesterday. We traded up in the overnight, kind of went into a little range until the regular market opened, and then we traded down and rallied late in the afternoon. So it was almost a mirror image of yesterday. A little more volume yesterday than today, but that's not surprising considering we're going into the 4th of July holiday here in the U.S. It's pretty typical. Okay, had a slight interruption already, but anyway, uh, the day looks very similar to previous days. The two-tier down channel that found the bottom and then kind of rallied into the close. But let's talk about the trades. Um, Starting out, when I came in, it looked like we didn't have the bigger rally that we usually have, but we had a nice rally. And when you got this failed second entry short here, this is where you want to go long. And if you measure, I haven't measured this, but I'm guessing if you measure it, you're going to find out it's just eyeballing. It looks pretty close to a measured move. Yeah, it looks, we might have missed it by a tick. But that's what you want to see. And there's your one leg up, your little two-legged correction, then another leg up. And I'm going to show this real quick. I don't talk about this much anymore because you should have this down. There's enough videos to teach you. But people still struggle with second entries, and really the second entry is here. This is a failed second entry because you got a new low here, pull back first entry, pull back second entry, and then it goes higher. But let me show you this. Here's your new high. This is how on the way up you're counting from the high. So here's your new high. You get your first correction, and notice what happens. You get your first attempt to go higher, and then you get another correction, and then you get your second attempt to go higher. That's your second entry long right there. That's a second entry right there. The only reason I didn't mark it is because it's before 7 o'clock. It was like 6:30 or something, or I'd have that one marked too. But that's all there is second entries. New high, you get your correction. There's your first attempt to go higher, your first entry. Then you get another little correction, and then there's your second entry and your second attempt to go higher. And that's all a second entry is. You get two legs of correction. One leg, a correction, and then you go a little higher, and then the second leg of correction. And it doesn't matter if this one's higher than this one or lower than this one. It's still a second entry when it breaks higher. And the only thing that keeps it from starting over is as long as you don't make a new high higher than this high right here. Now, if this high would have went higher, the count would have started over, and you pulled, and it would have been just like starting here again. Like right here, you finally got a new high that was higher than the previous highs, and so that's a first entry right there, and you never got a second entry till way down here. Actually, you didn't get a second entry because that high is higher than that one, so the count starts over again. So that's another first entry. So it's really that simple. And people think it's something magical. People try to make it. It's really hard to describe, so people think it's real difficult. But it's just you're just looking for two legs of correction in a trend, and that's it, without making a new high. So anyway, that's enough about that. I want to wrap this up. It's pretty late on Thursday evening. I stepped out for a little while and came back to do this. So I almost didn't do one tonight, but I felt like since tomorrow's a holiday and I've been gone for 10 days, I'd come in and do one. So, but anyway, but notice you got your break here of this trend line. You really got one here, but you got a break, a new high, and then you got a little trap. It's tempting to go short right here, and you really could have if you wanted to. I'm not going to mark it because you could get another push higher than that, and you really need to wait on a second entry, uh, counting off the high. And you count the entries a little different off the high. Um, there's your first entry, which is just your first move down. If you're counting off the opposite side, I guess is what I'm trying to say. You're not counting going higher, you're counting going lower. This is a classic reversal pattern. You get a little failed break higher, and it runs and shoots right through the EMA, and then makes a couple of lower highs, and then it goes lower. That's a classic reversal pattern. Normally what will happen is it'll pull back and test the EMA and then rock it off. This one struggled a little bit before it went lower. So, um, but anyway, back to this trade. You got your first leg down, pull back. So this is a second entry counting off the opposite side, meaning counting off the top when you're really not going higher. It's so hard to explain. I hate to even get into that. But just understand you can count off both sides all the time, but when you're counting off the opposites, and so in other words, this is an uptrend. So if you're moving down, instead of trying to figure out the count for going higher, you you don't the first move down. And if you're coming off the bottom, this would be a first entry off the bottom, and then you pull back, and there's your second entry counting off the bottom. So I hope that's clear. It's just I probably should have named it something different, counting off the opposite side, because it really works a little differently. But all a second entry is the second leg or the second move. And so that's the reason I originally, when I did this to myself, that's just what I called it, but I understood. But now that I'm teaching it to other people, I probably should have named it something different. Maybe one day we will, but I don't want to get into that. So, but anyway, this is a second entry short when it broke lower, counting off here. And here's how I got it. Here's your new high. First entry, pull back, and when it went lower, that's your second leg down or your second move down, so your second entry. And this would be a third entry, and this would be a fourth entry, and this got made a new high, so it's starting over again. But once it starts going down, then you really want to start counting off the lows, but you can have the count going both ways at all times. So just remember that. But anyway, you got to first leg down, and that's a big bearish leg, a reversal type leg, because it shot right through the EMA. Look what normally happens. Even if prices get through the EMA, they struggle, but most of the time they don't get through. And when they start getting through, when they shoot right through like that, that's telling you something's changed. And we know why, because we had the break and the two legs up to a new high. And we had two measured legs up for the most part on these two legs. So you get a second entry short here, counting from this high, working down. And then you get a failed second entry long, and you got a nice bearish reversal bar. That's kind of an inside bar, so I liked going short there. And those were two quick, easy scalps. It was tempting to go short right here because that's that double test rule, but look at the stem right there. That's a horrible signal bar. And so I was a little leery, and I think you're smart skipping that trade, because look what happens. It breaks lower, reverses up, and it was tempting to go long too, but again, it's right into that resistance. So this is one of those trades. I think if you went long, it worked. I didn't really even count the ticks, but I'm not going long there. Because we know what happens when you fell on a breakout like that. It could have rocketed off, and you could have watch it go without you, but you're better off doing that because it's just not a good setup. And look at that bearish reversal bar. That is a beautiful setup. Go short right there. Don't even ask questions. And look at it go. And then notice the new low there. Pull back, first entry, pull back, and there's your second. Look, and notice what it is. It's two legs of correction there. There's your low. You got one leg up, pull back, second leg up, and so that's a second entry short. And that's all a second entry is you waited on two legs of correction. And you got your one leg of correction, another little pullback, your second leg of correction, without making another new low. Once you make a new low, you got to start the count over. Like, here's a new low, so there's your first entry, but it makes another new low. So you start over. It pulls back. You get your first entry. It corrects. It never really makes a higher low here, but you still could treat that like a second entry short, or your second attempt to go lower, and boom, off it goes again. And I'll talk about this one in a minute, but let's go back to here. I got ahead of myself. But yeah, that's a second entry short. It's not a beautiful signal bar, but you tried to go higher above here twice, and you got a little double top, and you got that one tick failure. I liked going short there regardless. Uh, and it's a failed second entry long because notice that new high, you're pulling back first entry, pulling back second entry long, it fails, goes short, and it's a quick, easy scalp. And then we talked about this one. It's a notice the new low, pull back first entry, and this breaks higher here, but you never really made a higher low. It actually closed. If you went to a real small or smaller chart, you would probably see a clear second entry there. But there's a little bit of congestion here. This is not a perfect setup. That's why I marked it in green. It's close to this support area right here of the range. And it was kind of tempting to go long there. But I was a little worried about that because of this possible trend line working down through here. Originally, I had this higher, oops, I had my trend line higher too. I had it up here, but I believe it's right here. And when we turned down here, I just kind of adjusted it and it fit a little better. And it turns out it was the right spot. So that one did need adjusting a little bit. But yeah, I like this one. It's a little bit aggressive and there is some congestion, so I did mark it in green. But if you took it, there's some reasons, some legitimate reasons to want to take that trade. Um, and then notice what we get here. You got a little channel working up. You get a break, a move to a new high. Where does it turn down? Right at that same resistance line across there. Big bearish bar. And this almost looks like a repeat pattern of this little move here. It basically is. And you could really treat this like a two-legged correction. Even though we went a little lower there, this is close enough to two legs back to treat it like a second entry as well. It's a breakout pullback second entry short on this failed break, on a break lower here. That's as bearish a bar as you're going to get. I would use a limit order here. I did use a limit order here and let it back up a little bit, and then it shot on off because that's a big bar, and you got to have a big stop to enter this properly if you don't use a limit order. So if you can't get in with your 8 ticks, you got to use a limit order to offset that, or you got to let it go without you, unless the market's just crazy trending, and then you just jump in regardless. Um, and there's another entry here, but this is a double bottom with a little bit of a trap. And you got another resistance area right here. So I was a little bit afraid of this one. I was afraid you're going short right into what could be a double bottom. Turned out it worked, but if this one would have broke higher, it would have been a failed second entry long. I would have liked it better. It probably could be marked in green as an aggressive trade, but that's not even a good signal bar. I mean, this closed in the higher part and is more of a one bar trading range. And so you got 3 bars stacked up there, and at least one of them's a doji, you know, right at the lows of a big move down. It's just too aggressive, and so I don't like it. Wait for the correction in a second entry or something. And it did turn out to be a good move. And then notice your new low, pull back first entry, pull back second entry. This looks a little like a doji, but this is just one tick off the low, and that's a bearish reversal type bar. And notice what it did. It broke higher than this little double top here, those 2 botching highs, and it broke higher than that one too and failed. So I like that one. You might have used a limit order here. You didn't have to. You could just enter with a stop, but you would have had to watch it pull back a little bit before it dropped on down. And now we've bounced off this lower line twice. You can pretty much confirm that lower line on that measured distance there. So you got to be real careful going short past that point. And look at all the support right across there. And this is really kind of a breakout pullback short, but it's not a failed second entry long or anything, so there's no real trap. So I was a little afraid of it. It did work, but this is where you just got to be patient, and you got to let some of these go without you, and wait on a better pullback. And then finally you get a good pullback with a first entry, pullback, and you get a second entry short right off that EMA. And so that's a lot better place to enter because look at all the room you got before you get down to the previous lows. And it is right off the EMA, so it's, you know, you're selling high instead of selling low like you would have to in these. So I hope that makes sense. But notice the overshoot here, and that's telling you something too. And so when we bounce there again, you got a first entry right there, and then you get a second entry short right there. But guess what? Let me move these out of the way and make this a little bigger. This is a good learning opportunity. Look at that signal bar. That's a horrible signal bar. It's above the EMA. This is one of those where you get trapped on a reversal. And you could be expecting it because we had an overshoot here. And when you get that, you'll probably get an overshoot on this side. And that'll lead to a reversal a lot of times. You won't even get a retest. And that's what happened this time. No retest. Prices tried to go lower in retest, but they couldn't. So, but that's a failed second entry short right there. Notice this new low, pull back first entry, pull back second entry, and it fails. As soon as it broke higher, it's a failure. So just have your stop right there. And it was a little hairy because it didn't you didn't get your scalp before it backed up again. But if you put your stop 1 or 2 ticks below the signal bar, which is right here, you were safe. And this is one I would add on. Even this late in the day, I'd consider adding on if I was still trading. Because this is where and when you get 2 loads and 2 runners, you can make some pretty good money there on that trade. So if you're still trading, I like adding on there. And that got you into the 2 o'clock hour. And that was it for today. So pretty typical to what we've seen the last couple of days, almost a repeat pattern today. Um, Nothing really out of the ordinary. You just have to, and this is what I'm always talking about. There's trends within a range. There's ranges within a trend. There's little trends within bigger trends. And so you got to see the whole picture. And you got to be aware, and this is a little range right here with a little breakout pullback short. And if you draw the lines, it'll be real clear. So this is a little, I'd probably more categorize this one as congestion, but all congestion is a smaller range. And you can see that range right there. And the little failed break lower and turned into a breakout pullback short. And that's exactly what you would expect. So there's some reasons to take that trade if you had a better signal bar there. And if we hadn't touched the low here, I would have been a little more interested in this one, but we'd already touched it twice. And so, and we didn't even get back to the EMA and quite back to the midline there. So I was a little leery of this one. But great trading day. Hope you had a great trading day. We're going into the holiday. I hope you enjoy your 4th of July holiday as we celebrate our Independence Day here in the U.S. For those of you outside the U.S., take the day off as well. Celebrate it however you celebrate where you're at. And we'll be back again to do it Monday. And I'm done for today. This is Matt with PriceActionTradingSystem.com, and we'll see you next